Thanks for joining us. I'm Marlin Bohling with you as we watch your ag commodity trade here on a Monday, the first full trading week of 2019. And let's take a look at some of these outside markets. Last time I mentioned the fact that we had the Dow down a little over 100 points, kind of turned around from overnight. Let's see what the dollar is doing in the crude oil trade this morning. Dollar is weaker. We heard some reference to that earlier this morning. It has been at one time over 500 points lower, but right now we're down 440 points on the March futures, and that would put it at 95.340. And if you want to take a look at the crude oil trade for West Texas crude, here we're rallying this morning. Take a look at this. February now back up to $49.32 per barrel. That is up $1.36 to kick things off here on this trading week. And let's go ahead and dive into our futures trade, where we have the corn market on March now trading a penny lower at 382, not going very far, but it is a little bit weak in the knees. July down 3/4. Soybean trade had opened up about a nickel higher, and it's kind of hovering there. We have March up 4 3/4 at 926 1/4. What about the wheat? In Chicago, we have the March contract now 3 1/4 lower. We're at 513 3/4, and July down 3 3/4. Kansas City on that March contract, it's trading 2 1/2 lower at 503 1/2, July down 2 3/4, while on the Minneapolis, we have the March contract now up 1/4 cent at 570 1/2. We've been on both sides of unchanged in that one, and July up 1 tick as well at 582. Well, I'm pleased to be joined in the studio here by Chris Swift of Swift Trading Incorporated in Nashville. Happy New Year.
Thanks, sir. Same to you.
How are you? I haven't had a chance to visit with you.
Yeah, it's been a couple of weeks. Yeah, doing great.
Absolutely. All right. So when you look at these prices that we just ran through, can you take anything away from that at all, other than the soybeans making a little bit of a move?
Not really. The Chinese and the U.S. are now in negotiations today. They started a round of negotiations, and apparently the market is not real thrilled about it. Of course, the bean market would be the most benefactor of any negotiation come through. So, you know, it just doesn't look like there's that much happening this morning.
What's going on as far as cash farmer sales to start out the year? Have you heard, or are they letting go of any corn or soybeans? I
haven't really heard of much. I've heard some people saying there were some grains being moved out of the bins, but that could have been just first of the year deliveries. Whether they were actually marketed in the 2018 year or not, I don't know. But there's been a little bit of movement, but not a great deal.
So with the lack of government data coming out, and of course we don't get any overnight export sales anymore, and everybody's looking for clues on what may be going on behind the scenes. Have you heard anything for freight rate changes?
No, I haven't. I haven't paid a great deal of attention to that. I just don't think this is a very robust time of the year for a lot of that to take place anyway. So although we are missing some information from what the USDA could provide us, it's not crucial data just yet.
As far as I know, we will get export inspections, fingers crossed, here in about a half an hour.
I've heard of that, yes. Whether we do or not, it's a different story.
We just don't get the export sales or the overnight sales, but we get inspections. Why? I don't know. But anyway, okay, we'll come back here in just a moment, and we'll talk more with Chris Swift of Swift Trading. We'll talk about our livestock trade when we return. We're joined by Chris Swift of Swift Trading in Nashville. He's in studio today to talk with us about the markets. And let's go ahead and take a look here at our live cattle and feeder cattle trade and the lean hogs. Okay, Chris, this is, I don't even know how you read much into this today, because you have February 1 tick higher at 121.95 on the live cattle. You have April 2 ticks lower at 123.95, and you have June 2 ticks higher, 5 cents higher, at 115.60. So for all intents and purposes, flat on the day. Feeder cattle trade, we'll switch over there. Now it had opened up about 75 lower. Now we have turned around. So this could be significant here, Chris. We have March feeders 33 higher at 143.15. April now 45 higher at 144.10. So that's $1.20 off its earlier low this morning. That is interesting. Looking at the lean hog trade, well, on the lean hogs, we are lower across the board, but not by a whole lot. We have February down 20 and April lean hogs down 33 at 66.42. I have heard some mention, Chris, about the good old Goldman roll, that it may come back to revisit the livestock trade here sometime soon. What's the deal with that?
Honestly, I don't know. I've heard that too, but Goldman trades index funds, and cattle are probably part of that index fund trade, so you could see some movement from that, but it generally lasts less than a day or two, and it may create a spark, but you got to remember they're selling for everything they're buying. They had to sell one contract month to buy another, so it is some importance to see how big they come into the market, but right now it doesn't look like anybody's real gamey for anything.
I'm glad you brought that up about the index funds, because last week there was a lot of talk of index fund rebalancing,
yes,
in air quotes. Explain what that is, would you?
Well, I've heard, I can't say for sure exactly what all of it is, but what I understand is when equities are not performing very well, the human nature is to buy and hold something. So an index they can buy and hold and allow another participant to actually do the physical buying and selling of the commodity contracts or commodity companies that they feel that will benefit from any kind of rise in commodity prices. So a redistribution of funds, sorry about that, you know, from the equities markets on into the commodities markets. And I've heard that for 30 some odd years. I've really never seen it as far as, wow, people are really going out there and putting corn contracts in their 401ks, and you just don't see that very often.
So does it just more or less kind of set the table for the stance that they want to take moving into a new year?
I think so. You know, the indexes, if they see something that they want to be a little more heavily long in, then they will invest a little bit more in it, whether it's a company that participates in commodities or whether it's a physical commodity itself.
How much damage was done on the live cattle chart Friday?
It looked pretty ugly. I think we're in a time frame right now where we're going to try to see what the demand actually is. Going forward, it looks like we're going to kill the same number of cattle in 18 as what we did, in 19 as what we did in 18. So I don't think our supply is going to dwindle much, but there's a lot of things going on right now that may have the consumer want to contract just a little bit in their discretionary spending.
So you do see the connection remaining between the equity market and the cattle market?
There is still some issues out there to resolve yet.
All right. Well, Chris, again, thank you for coming in today
Sure.
and talking with our audience and kicking off the new year.
Absolutely. Glad to do it. Looking forward to a good 2019.
Absolutely. We'll talk with you for about a year.
All right. Sounds great.
All right. Chris Swift of Swift Trading Incorporated, right here in Nashville.